Hey guys, it's Marcelino here. As you can see, it's Forex by Marcelino. So what this channel will basically be is it's gonna be I'm looking forward to just live trading sessions where I would go live before London session possibly and just give out my analysis as to what I will be looking for. And let's see how it goes. It's gonna be a bumpy ride, a wild ride, a profitable ride, most definitely profitable. But let's see how this goes. Today, what I want to bring to you guys is basically to me, the most important thing about trading. The most important rule. It's no strategy, it's no philosophy or anything. It's just risk management and money management. That's the only thing that I wanted to bring, and I wanted this to be my first video because I know the power of risk management and money management. Without this, there is no forex trading career. There is no you coming to forex and making money because yes, you can get lucky one, two trades, but then the next trade you over leverage and your account is gone. That's all it is. So let's get straight into it and let's see how it goes. So as you guys can see, I have a small little example laid out here. We have a let's actually fix this up. We have $100 account, right? $100 account. So this whole scenario, this whole example here is based on you as a trader being an intermediate trader. You are not a beginner, you are not advanced, you are an intermediate trader. You have, as mentioned, I think with you have a 50% win ratio. You have a 50% win ratio, meaning that you win 50% of your trades and you lose 50% of your trades. I'm not taking into account break evens, although I know that you probably got a 30% break even if you go to break even after 1 to 1, but that's something else. So you have a 50% win ratio, 50% lose ratio. So what I wanted to bring to you guys is a small account of $100 because principle transcends amount. Remember that principle transcend amount. So we have an account of $100, right? The account is $100. You know your skill tells you that you have from past experience, from past data collected, from historic data, from whatever you were using, if whatever journaling process you were using, you have a 50% win ratio. Right. Oh, so you know you have a 50% win ratio. That's good enough. In my case, I would say to be able to risk 5% on the small account. Because I know that after losing 5 trades out of 10, I'm going to win the next 5 trades out of 10 based from historic value of my data that I collected. So all you're doing is you're saying, I'm going to the next trading week. I just deposited $100. I'm risking 5%, which means I'm risking $5 of this $100 for each trade. So worst case scenario is you lose all first 5 trades, all of your trades, all the first 5 trades that you take, you lose it. Worst case scenario is that you're gonna say 5% times the 5 trades that you have taken, and you're gonna get a $25 loss, which is 25% of your account down, which sounds horrific, it sounds bad, it sounds sad, and it sounds mad at the same time, but we're playing the numbers game here, and that's all that trading is. We're playing the numbers game. What I also forgot to mention is that you are basing your trades on a 1 to 3 risk to reward ratio, right? So now you're down by $25. Your account is sitting on $75, then it's possibly Wednesday midweek. So that means you're down $25, you've taken 3 trades. The next trade that you take is a winner. You have a 1 to 3 risk to reward ratio, meaning that for each $5 you're risking, you're about to make $15, right? So your next trade is a winner, you make $15, you're only down $10 at this point because you just recovered $15. And so now you're understanding that when you have your when you're in hindsight, or even basically in hindsight, when you have your win ratio down on paper and you know what your skill level is in trading, you know what you can risk based on your skill level, because you know that you will not lose 100% of your trades in within 10 trades, for example. So now, because you went worst case scenario, you have lost your first five trades. So that means automatically that your next five trades are winners. What does that mean? Now we're saying five trades times your maximum win rate of 15. So it's 5 times 15, you would have gotten $75. So for the next trades, you would have covered your $25 that you lost, and you would have made a $50 profit, making and ending up at $150 balance after 10 trades. So that's all that I want to put into your brain is stop looking at the small and macro point of trading. This trade that you lose does not mean, or three trades in a row that you lose does not mean that you have to increase your risk to make whatever you just lost back, because that is when the horrific part of trading comes in, when you over leverage or you step out of your plan. So just play the numbers game. Play the numbers game. Know your, first of all, before you start trading with real money, know your win to loss ratio. I would say a win to loss to break even ratio. Know it. Know what your risk to reward ratio is on every trade. Know what you are risking for every trade. And this should all be part of your risk management plan, your trading plan. It should all be within there. So now you have a balance. Say mid-month you have a balance of $150 after you went through that. You on a five trade winning streak, and you decide, okay, because now you have $50 profit, you are increasing your risk to $10. Even if you lose the next two, three trades, you know that if you're gonna win your third trade, you're gonna cover what you just lost, and more than likely you're probably gonna win the following trade and the following trade, and you would have been up by $60. So it's just about numbers, just you understanding the numbers game. That's all that I want you to understand, is that trading is a game of probabilities, and us as traders need to realize that one of our affirmations is that trading, or should be, that trading is a game of probabilities. Always reminding yourself when you're sitting in front of the charts before you take in a trade, if you're gonna over leverage, trading is a game of probabilities, and you are always trying to tweak or move the probabilities in your favor. However, you never know what the next move of the market is, and that's something that you need to get into your brain. Now, 5% is a high risk. It's a high risk number. Like you are risking quite a high number on your trading account. So I would suggest that this 5% is only for small accounts. So I'd say for anything below $1,000, you risk 5% to trade. And once you start getting into $1,000, I would say start getting into the region of 1 to 3%. And as you go up, when you get to $100,000, that's when you get to 1% a trade. 1%, even if you want to drop it down to 0.5%, and you have a risk management plan, when you reach 5%, you can raise it to 1%, and when you reach 10%, you can raise your risk to 2%, things like that. So you're using a step risk plan. That's what I just wanted to bring to you guys. This is all about understanding how the longevity of trading works, and being able to look back on that small trading account over 2 years and realize that you actually didn't blow the account, but you played the game of trading, and you mastered it over 2 years. Because many people, including myself, after 2 years you've realized that you've blown so much accounts, and you could have just taken your time, learned the skill, sat down, learn the skill of trading, learn the patience and the way trading actually works. And after that 2 years, when you actually put the time in and you realize, I took my time to learn this thing, and now I'm here and I can handle a big account, and I can handle what's about to come my way. And that's what it's all about. That's what it's all about. You realizing that you've mastered the skill of trading. So yeah, guys, it's been beautiful speaking to you. I look forward to the live trading sessions that we're gonna do. And yeah, please hit the